So, as the Bank of Canada sits on the sidelines, seemingly contemplating whether to bring rates down even further, we're seeing more headlines like this one, that more than 300 Canadian filings for bankruptcy each day as insolvency filings hit a 4-year high. So, the Canadian Association of Insolvency and Restructuring Professionals report for the second quarter show a rise of 12.4% in insolvencies compared to the year prior. And the business numbers, or the numbers for businesses, are even worse, with insolvencies spike. In Ontario, the province which saw the greatest year over year bankruptcy increase with 13,309 filings, a rise of 18.3%. And industries that are hurting the most are construction, transportation, and warehousing, as well as administrative and support and waste management. Now, this is all to say that goes back to what we said and what I pointed out, even in the slowdown of the housing market overall, which is that construction jobs and the ripple effect of the other jobs that go to support. Now, housing has been for many years such a big part of Canada's economy. That's why we're going to start to feel this pain. The challenge that we've got is the lag. And the longer Bank of Canada holds off lowering rates, the more that lag is going to start to actually snowball. We're going to start to see those construction jobs and all the supportive jobs, again, when you look at transportation and warehousing, all part of that, by the way. And ultimately, we start to see that slow down, and we're going to continue to see some bankruptcies. Now, it seems to have slowed a little bit, but there'll be the next phase. The more important part of it for me when I look at job growth is the fact that SMEs, or so small, medium enterprises or businesses, are slowing down. They're filing for insolvencies, which means they're not hiring. They're just trying to keep their doors open and have the liquidity. So when we look at what's going on for the rest of 2024, we're going to continue to see these headlines. Again, what we haven't seen is the slowdown in the prices of real estate. We've seen buyers sit on the sidelines. We've seen listings go up, but we haven't seen prices come off. We've got immigration driving that part of the equation, if you will. So where will it all go? Again, we're going to come back to saying regionally, and then property type. Stay focused on these detached, semi-detached, single family, small family units. You'll do exceptionally well. And we know that interest rates will come down, given the fact that we've got this pain that's being felt in the market by both individual families and businesses. So keep your eye on that. I think we're going to start to see it. I would love nothing more than to trash our government, because it just really pushes my buttons that this is happening, and the Bank of Canada is being slow to lower rates. As investors, it gives us opportunity. So stay focused on these headlines, watch what starts to unfold. And I'm going to give you one other kind of piece of guidance, if you will. We talk about it all the time. Cash is king. Stay as liquid as possible so that you can actually step up and take advantage of some of the opportunities that we're going to continue to see unfold in the real estate market. So if you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.